Hello and welcome to Accounting with Kehinde, where we make accounting simple, practical, and easy to understand. And I'm Kehinde, and today we are answering a question every business owner should know. And the question is, why does a business need accounting? Right? You might be asking yourself a question, why does a business need accounting? Imagine two friends, Tunde and James. Both started a supermarket business on the same day, right? In Lagos here. They both invested 2 million naira of their savings. They even sold almost the same product. But 1 year later, Tunde opened his second branch and James, on the other hand, closed down his own business permanently. Was Tunde smarter? Did he have secret funding? No. The difference was one thing, and the difference is accounting. Today, I will show you exactly why every business needs accounting. Tunde, on the other hand, kept precise daily financial records, right? He tracked every single kobo entering and leaving the business, and the result was that he was able to open a second supermarket branch. While James, there was no record keeping, he mistook cash flow for personal profit, and the result was that he ran out of working capital and he had to close down. All right? James fell into a trap that kills thousands of businesses every year. He mistook cash flow for progress. Money came in and went out, and because his bank account wasn't zero, he assumed he was thriving. He was running his business completely blind. Now we move on to the importance of accounting. Accounting is not just about paying taxes, it's not just about recording and all. It has a lot of importance to businesses. And accounting provides five vital pillars for survival. The first is profit measurement. It helps to tell you your true profit, not just your cash flow, not just money going in and coming out of your business, right? It tells you either you're making profit or not. And it helps you to safeguard your capital. The next profit is expense control, right? Account helps you to identify your expenses and control your hidden expenses. It helps you to know where your business is leaking funds and you can able to stop that leakage. The second importance is that accounting helps in smart decision making. It guides you in the next business decision you want to make. Either you want to open another branch, either it is time for you to get that asset or equipment that your business needs to thrive. Accounting helps you to make data informed decisions. You don't just make decisions on your own, you have data to make those decisions. The next important is it helps with legal compliance. Accounting helps to keep you safe from tax issues, right? It keeps you safe from tax issues. You'll be able to meet tax and regulatory obligations. And the last but not the least is it helps to attract investors and bank loan. Imagine if you want to apply for a loan now, or you are trying to pitch your business to someone, they ask you for a business plan. If it's a business that has been going on for a while, they ask you for a financial statement. Why do they ask that? Just for them to know if your business is viable enough for them to invest in, if the company is viable enough for me to give funds or pump in my money into, right? It helps you to be investor ready and you can able to build trust with your investors and the bank. Now let's go on to real life example, like a practical example. Let's look at practical example. Imagine a local bakery owner. In a month, she produces 500 loaves and she incurred all these expenses: flour, electricity, salary, baking ingredients, transport, and generator fuel. In a month, like I said, she produces 5 loaves and she sells out every single month. But she sells at 500 naira per bread and she thinks she's making massive profit, because she sells out every month. There's no leftover, there's no wastage. But because she never used the accounting to factor in the rising cost of all the ingredients that she's using, she's actually losing 14 naira on every single loaf of bread that she sells. The more bread she sells, the faster she goes broke. And without accounting, you cannot see this trap. Common mistakes that business owners make is that they assume that once money is coming in, entering into my account, my business is doing well. But the answer is no. As long as money is entering into your account, doesn't mean that the business is doing well. And I need you to write this down in your notebook right now. More sales is not the same as more profit. Profit is different from sales, your cash flow, right? Because you are making more sales does not mean that you are making profit. Profit is the money your business earns after subtracting all the cost of making those sales, right? Let me give you a practical example. You're a business owner, you sell cosmetics. The cost of buying that cosmetics and bringing it down to your shop is, let's say, 500 naira. And you put up the cosmetic up for sale for, let's say, 800 naira, right? When you sell that cosmetic, your profit is 300 naira. Like we said, the sales minus the cost of selling that asset, that is 800 minus 500. Your profit is 300 naira, right? So your profit is different from cash flow. Now, what is cash flow? Cash flow is simply the movement of money into and out of your business. Your cash flow is not your profit. Like the former example I used, you are selling cosmetics, the cost price is 500 naira and you are selling it for 800 naira. When you bought the cosmetic for 500 naira, 500 naira is your cash outflow. And when you sell that cosmetics 800 naira, 800 naira is your cash inflow. Do you understand now that your profit is different from your cash flow? But in a situation where the customer purchased the item and tells you that, oh, I'm going to pay next month, right? And you give the cosmetic to the customer. For that month, you only have cash outflow and no cash inflow. Did you make profit? Yes, you made profit of 300 naira, but there is no cash. Let's do a quick knowledge check to see if you are following. If your business makes 500,000 naira in sales this month, does that mean you made 500,000 naira in profit? The answer is absolutely no. That 500,000 is your total revenue. You have not subtracted what it cost you to buy the item you sold, your rent, and your own salary yet. So that 500,000 naira sales is not your profit. To summarize today's lesson, first, accounting is the financial compass of every operating business. It tells the truth about your business. It helps to protect your capital and review your true expenses, and it prevents you from closing down like gyms. Accounting is the financial eye of any operating business, right? You see your business from with the eye of accounting, right? And the next thing is that cash flow and profit are two entirely different concepts. They are not the same thing, and we learned that in today's class. And the last is proper records prevent business owners from sudden collapse. When you keep proper record of the transactions in your business, it helps your business from collapsing suddenly. Now let's go on to the interactive assignment, right? Look at any business around you, right? Pause this video and think of any small business around you, right? And drop a comment below telling me just one specific reason why that exact business needs proper accounting. Thank you for learning with me today. If this lesson added value to you, please like this video and subscribe because every lesson builds on the last one. Don't forget to do this assignment in the comments. I genuinely enjoy reading your response. And remember, accounting is not difficult. It only becomes difficult when nobody explains it simply. I'll see you in lesson 3.